What's up everybody, welcome to Money Management channel. My name is Andrei and today I'm gonna be doing an update on FRC stock.
I got the cash in the bag, stadium packed. Born a rock star in this life, gonna live it up.
And in today's video, first of all, I will show you where we are on the price chart and how we get there. Then we'll continue with the fundamental news that might be the driver of its upcoming price movements. And at the end of this video, I will share my thoughts and my technical analysis. And I will show you what should we expect next. So let's start with the price chart. Let me show you its recent price action, and I have to say that it found quite a good support at the range of about 11.6 to $11.7. And I have to say that previously, when I made my previous video, my main assumption was that we should see a breakout above this sloping line, and I drew this line by connecting this couple of tops. And I've told you that with the breakout above this range, we might see the movement to the upside. But the confirmation of this breakout should be the increase in volume. And unfortunately, we don't have this confirmation yet. We just went out of this pattern without this confirmation, and this means we cannot rely right now on this breakout as the real movement to the upside, as the beginning of this movement to the upside. On top of that, I have to say that on my previous video I've told you that most likely we should see lower price targets, and depending on the decision of the authorities directly related to the FRC bank, definitely we might have a major movement, and if the bank will be saved by authorities, this movement will be much higher, because on a daily time frame we still have an extremely low RSI. On top of that, on a weekly time frame we have the RSI that this asset haven't had ever. And this means the movement to the upside is imminent only in case of positive news from authorities. That's why we still have to be cautious, and I will show you my analysis, my technical analysis and my prediction for upcoming week in just several minutes. And for now, let's continue with the fundamentals. First of all, I want to show you that this bank is still extremely popular among retail community, because on stocktweets.com website we can see it on the third place on most active section, and among the Wall Street Bets community this asset is on the fourth place as well. But right here we can see the diminishing interest to this stock, and that's why the most probable outcome based on this data that this asset should go a bit lower. And let me show you some interesting article right here on Wall Street on Parade. You can find this article that was published several days ago on March 22nd, and it says Citigroup's Citibank took the largest amount of loans from the FHLB of New York in 2022, reminiscent of FHLB loans taken by Silvergate, SVB, Signature and First Republic Bank. And let me show you some interesting details. On March 13th, we published the chart below showing the 10 financial institutions that had taken the largest loan advances from the Federal Home Loan Bank of San Francisco as of year-end 2022. And right here, as you can see, the list of these banks are very familiar to the list of banks that are at the edge of bankruptcy. First of all, it is a Silicon Valley Bank, and we have to say that this bank doesn't exist anymore. Next one, First Republic Bank, and let me show you that Silvergate Bank is also in this list on the 6th place. So, and this list shows how risky might be the Federal Home Loan Bank financing for the banks that are not so stable. And definitely right now we can see a lot of news that describes this situation retrospectively, and this news could predict this type of crisis before it even happens. But I have to say that this news definitely cannot predict the future. We can only assume how the things might go. And let me show you another quite interesting news. We are on CNBC.com, and this article was published on March 25th, and it's titled "Deposit Drain from Smaller Banks into Financial Giants like JP Morgan Chase Has Slowed, Sources Say." Let me quote you the bullets. The surge of deposits moving from smaller banks to big institutions, including JP Morgan Chase and Wells Fargo, has slowed to a trickle in recent days, CNBC has learned. The deposit drain, which rolled markets globally and forced regulators to intervene to protect bank customers, began improving around March 16th, said people with knowledge of inflows at top banks. The situation is fluid and could change if concerns about other banks arise, said one person who declined to be identified, speaking before the release of financial figures next month. The past few weeks have exposed a glaring weakness in how some banks have managed their balance sheets, which could lead to more turbulence, said Citigroup CEO Jane Fraser. And definitely, let me show you that right now, First Republic Bank is at a relatively safer situation. According to Bloomberg, regulators believe the deposit situation at First Republic Bank has stabilized. But at the same time, First Republic Bank has hired JP Morgan and Lazard as advisors to come up with solution, which could involve finding more capital to remain independent or a sale to a more stable bank, said people with the knowledge of the matter. If those fail, there is a risk that regulators would have to seize the bank, similar to what happened to SVB and Signature, they said. A First Republic spokesman declined comment. This means we still have some risks that might become a reality for this bank. On top of that, we can see more and more banks that might be the victims of this major banking crisis. And one of them is Deutsche Bank. And definitely this bank is much bigger than SVB and triple as bigger as Credit Suisse. And this means if this bank fails, we might see a major banking crisis for the entire world. And this means we might see much lower prices. So let's continue with the technical analysis, but before we dive deep right here, please subscribe to my channel, hit notification bell and hit the like button. This helps me a lot. So guys, definitely we still have a lot of risks directly related to banking sector, but right now let me show you that we have even more opportunities because from the technical standpoint this asset is still very attractive, and you have to know what should we expect next. And let me show you that this asset, as I already mentioned, has a quite good range of support at around $11.9 and a bit lower. And we also have this again another pattern, the descending triangle, and we are about to see the breakout below the range of support or above the sloping line as the range of resistance. And depending on the breakout and with the conviction of volume, we might anticipate the next leg either way. So what should you do if you want to enter the position? In my opinion, if you want to start to accumulate your position, you can start it right here at this very point, but you have to keep in mind that this asset might easily break this range of support and might go lower. And this asset already lost more than 90% of its value during last couple of weeks, and this means the next leg to the downside might end with the bankruptcy of this bank and with its acquisition by another major bank. And this means all of the positions might be worthless depending on the conditions of this acquisition. And that's why you have to realize all the risks and you have to know whether or not this asset is worth your attention. But on the other hand, if we will have the breakout above this range of resistance, as I already mentioned, let me switch to weekly time frame. As I already mentioned, we have quite good price targets, and let me show you that if I pull the Fibonacci retracement tool from its swing high to this swing low, let me show you more thoroughly, you can see that this asset has a quite significant upside potential, because from its current range we might have even a dead cat bounce will be for about 268% to the level of around $43.87. And the next price target, it is a still conservative price target, but it has extremely high potential profit of more than 440%. This means the upside potential is extremely lucrative, but the downside potential is on the table. That's why just accumulate your position with the fraction of your capital in order to be on the safer side and wait for the confirmation of breakout. So, I think from the technical standpoint that's it for now. If you like my video, please hit the like button and subscribe to my channel with notification bell. And see you guys and girls next time. Bye!
I got the cash in the bag,